Hello guys. Welcome to the world of insurance. Here we bought for you short notes of Chapter 3 of IC11 prepared and presented by Mr. Pravesh Thakur. Chapter 3 is Fire and Marine Insurance Product. Defined under Section 2 of Motor Vehicle 1988. Fire covers risk of property against natural calamities, riots and loss of profit from such damage. Marine cargo are goods in transit by sea, rail, road, and air. Marine hull are ocean-going vessels. Miscellaneous insurance covers motor, engineering, burglary, fidelity, personal accident, public liability and workman compensation insurance. Nowadays main sections of insurance sector classified as: First, property insurance consists of fire, marine, motor, own damage, engineering, burglary, aviation hull, crop and cattle. Second, insurance of person covers personal accident cover and sickness insurance. Third, insurance of interest covers fidelity insurance. Fourth, insurance of liability covers motor insurance, third-party cover, and product liability insurance. Fire insurance is cover against fire and other specified perils. Insurable property can be building, equipment, accessories, goods in factories, content in dwelling shops, hotels, furniture and fittings. Specified perils are fire, lightning, explosion, aircraft damage, except by pressure waves, riots, strikes, and malicious damage. Fire cover excludes own fermentation or combustion of property, boilers explosion caused by centrifugal forces, bursting of water tanks, missile testing operations, accidental leakage from automatic sprinkler installation, bush fire, exclude forest fire, terrorism, provided in conjunction with RSMD, war, nuclear, pollution, precious stones, arts, stamps, paper money, above 10,000 rupees, stocks and electric machine destructed by self-cause. STFI, stands for storm, cyclone, typhoon, tempest, hurricane, flood and inundation. Deductibles for industrial risk is as follows: 0.5% of sum assured, maximum 1 lakh, and for non-industrial risk 0.5% of sum assured, 25,000 rupees. Act of God claim 5% deductible, minimum 10,000 rupees, other 10,000 rupees, not applicable in dwelling. General conditions voidable if misrepresentation, 7 days expiry after peril occurred. If marine policy is covering same risk, then fire policy will pay only excess amount. No claim after 12 months of loss. Disputes referred to Arbitration Act 1996. Add-on covers can be as follows. First, Archic's fee is 3% of claim amount. Second, debris removal EXP are 1% of claim amount, and maximum 10%. Third, deterioration of stock in cold storage, spontaneous combustion, by fire only. Fourth, forest fire, impact damages, by rail or road vehicle, earthquake, fire and shock. Fifth, temporary removal, up to 10% of stock, loss of rent, and start-up expense. Sixth, escalation clause is applicable on building and machine with 25% excess. Cover period under special policies are: First, floater policy cover various stock at various locations under single sum assured. Second, declaration policy is for maximum stock in any day in all months declared by insured. Refund on adjustment is maximum 50%. Third, reinstatement policy specially in fire. Cost of reinstatement of property by new one within 12 months. Intimation period is 6 months. This policy is not granted on stock. Fourth, industrial all-risk insurance policy are for package cover, for sum assured above 100 crore. Cover for fire, burglary, machine breakdown, and business interruption. Underinsurance is permitted up to 15%. Fifth, agree bank clause is for policies with bank interest or mortgager. Hence claim is payable to bank. Fire proposal form filled with details of insured, nature of business, system of working, process of manufacturer, and insurance history etc. Consequential loss in fire policy cover for loss of gross profit, up to 3 months to 3 years, and indemnity amount should be equal to gross profit amount, on pro rata basis. GP is equals turnover minus fixed or standing expenses. Net profit is equals gross profit minus variable expense. Standing expenses are interest on loan or overdraft, rent, fee, remuneration, wages and other office expenses. Insurance Act 1938 Section 2 subsection 13a defines marine insurance business. Marine Insurance Act 1963 is for both land and water in transit goods. It also defined following docks. First, cover note is valid in absence of regular policy for 15 to 60 days. Second, marine policy form fetch details of insured and shipment, sum insured, premium and stamp duty. Third, Institute Cargo Clause, ICC, is for export-import policies, drafted by ILU London. Inland Transit ICC drafted by TAC. Marine cargo insurance covers export, import, coastal, inland, rail, road, and air shipment. Insured depends upon type of contract. First, in, free on board, or, free on rail, or, cost and freight, in which seller is responsible up to board and buyer thereafter. Second, in, cost insurance freight, contract, seller is fully responsible for insurance. Institute Cargo Clause, C, covers fire explosion, sunk, derailment, collision and jettison. Institute Cargo Clause, B, cover all above plus earthquake, volcano eruption, lightning, washing overboard, loss of package. Some extraneous risk can also cover by paying extra premium like theft, hook/oil damage, heating, sweating, breakage and leakage. Institute Cargo Clause, A, cover all risk and damages. Excluding willful misconduct, ordinary wear and tear, normal trade loss, loss by inherent vice, fruits, loss caused by delay, loss by financial default of owner, loss by inadequate packaging, war, strikes, riots and terrorism. Cargo policies are issued for specific voyage with no time duration. Warehouse clause is valid up to delivery to final warehouse or expiry of 60 days of dispatch, and 30 days in case of air transit. Inland transit, rail or road, clause, C, cover fire and lightning. Inland transit, rail or road, clause, B, cover flood, lightning, breakage of bridge, collision, overturning, and derailment. Inland transit, rail or road, clause, A, cover all risk. Exclusions are same as above. Cover duration is until delivery to final warehouse or 7 days for rail and road. Types of marine policy are: first, specific, for single shipment or voyage. Second, open policy or floating is stamped document for a year and, also for inland consignment. It has merit of continuous insurance protection, low admin work, and saves stamps duty. Third, open cover is unstamped document for large import or export and numerous shipment at regular basis. It contains limit per bottom and max stipulated amount per shipment. Valuation includes cost and freight and insurance plus 10% profit. In declaration clause, insured is responsible to declare each shipment to insured. And it also required to be stamped. Special declaration policy is for client whose annual turnover exceed 2 crore. In special storage risk, insurance covers insured in conjunction with specific or open policy and cover goods until delivery. Claims are of different types. Main cases of them are: first, in total loss claim amount is full insured value. Second, Particular average covers partial loss like 5 packets out of 100. Third. General average covers extraordinary sacrifice or expenditure, for preserving cargo. Fourth. Salvage loss covers for perishable loss sold at lower prices to minimize damage. Fifth. Ensue and labor clause expenses incurred to minimize or avert loss are reimbursed for betterment of cargo. Sixth. Extra charges include survey fee, settling agent fee. Claims docs are, policy, bill of lading, invoice, survey report, debit note, copy of protest, letter of subrogation. Marine hull policy covers loss or damage caused to ocean-going vessel or sundry vessel. Based on time and voyage. Institute time clause, hull, 1983 cover perils of sea, river, lake, fire, volcano eruption, explosion, violent theft, jettizuron, piracy, breakdown, accident in loading and unloading, earthquake, lightning, bursting of boilers, and negligence of master or crew. Main exclusions are war, strike, malicious damage, nuclear risk. War and strike risk can be covered under India WR Act 1976 for all ships registered under Indian Merchant Shipment Act 1958. Ship repair liability policy cover vessel which are being repaired. Charterer's liability policy covers damage during period of charter.